As the S&P 500 breaks the 6550 support, David Rosenberg warns, quote, "This is probably not a dip you want to buy," end quote. Let's take a look at what he says here. Following a breach of the critical 6550 technical support level, Rosenberg, the founder and president of Rosenberg Research and Associates, cautioned that the current market environment has shifted decisively, stating, quote, "This is probably not the dip you want to buy," end quote. The bearish call comes as the S&P 500 officially locked in the rally off the April lows as a completed pattern, suggesting that the upward momentum sustaining the index for much of 2025 has evaporated. Rosenberg forecasts a potential garden variety retracement of 50%, a move that would drag the benchmark index to approximately 5,900, the level where it began the year. Such a decline would represent a drop of over 10% from the current valuations, erasing months of gains and buy and hold investors. Now, if anyone wants to link through to his tweets and all of that, here is the link to that. Now, I really quickly, I know that we're making a bearish call here, but in the spirit of what Scott just said about taking a dose of reality, or maybe keeping reality in the rearview mirror, let's do that for a little bit. I don't think that a bearish move here is really anything to be afraid about. First of all, if I measure from just about the all-time high here, and I'm eyeballing, so I might not have it exactly right, we basically traded down 5.32% from the all-time highs. Folks, this is nothing. This is normal trading. There's really nothing abnormal about this. And in fact, corrections are generally billed as a 10% pullback. So this little move down here, I know it feels bad because we've spent so much time trading up after everyone told us that the country is going to hell in a handbasket, which of course never happened. So I understand that it feels a little bit different, but the reality here is we're 5% from the all-time highs. So I really don't think that we need to panic yet. Being cautious is always a good idea, but panicking is almost never a good idea. To estimate where that 10% would be, let's do that together here. Bang. This puts us at about 620, I think. Let me see if I can get that. Yes, 620. So look, this is not the end of the world. Even if the sell-off continues a little bit, frankly, this is something that we've been kind of waiting for. Like, let's have some of this froth and these juiced PEs come in a little bit, and we can maybe buy some of these companies at more reasonable valuations. So despite the bearish call here, I'm not sure what's going to happen, but despite the bearish call here, I think it's really prudent that we continue to take a dose of reality here. We're really not down all that far, even after yesterday's session.